What's going on, everybody? Welcome back to bootcamp day number 3. Today we're going to be going over price action and volume and how to piece the two together to identify high probability trades. Now, if you guys did not see bootcamp day number 1 and day number 2, I highly suggest you guys go watch those two videos first and then come back to this. If you guys did not know, over the next 2 to 3 months, I'm going to be teaching you everything I know about trading for free here on YouTube. So make sure you guys are subscribed to the channel, and also make sure to hit that like button, because the more interaction these videos get, the more bootcamp videos I will do. But without further ado, let's hop into the video. Okay, so in bootcamp day number 2, we talked about the basics of price action and how to understand a candlestick. So we have our body and we have our wicks. Now, to me, I personally want to pay most attention to price action when we are trading at key levels. And we'll talk about that here in a little bit. But I want to talk about how you can fully understand what is going on within the volume when combining it with the price action. So say we're looking at this candle right here on ES. This red candle opens up here, sometime throughout this candle goes as high as here, sometime throughout this candle goes as low as here, but at the end of this candle, price closes here. Now let's just say that we have a small volume bar, something like this. I personally don't really care about the price action or even looking for a long entry if the volume bar is very small. But now let's say that we change this scenario. Let's say that price ended up coming down to a support level, and when price comes down and hits it, we start to notice this huge influx of volume. This is something that I would be looking to trade to the upside, because price came down to a key level and we noticed within the volume that there was an elevation. Now, what is this telling us? Yes, this candle is red. Yes, the volume is red. However, that does not mean that it is all selling. So when we start to actually piece together the price action and the volume, what this is actually telling us is a majority of this volume down here came in from buyers down here. And how do we know that? We would not have reacted off of this key level with that huge influx of volume if there was not buyers present in the market. Now, again, had price came down, bounced off that same support level, but the volume was way down here, well, that's not telling me that any buyers are present, so that's not a trade I'm going to take. I need to always see a huge influx of volume at my key levels to help me confirm a trade. And here is actually a really good example of a trade that I took yesterday on SPY that moved about 50% and pretty much marked the exact bottom. So if we're looking at SPY on the daily time frame, we can see that we have a very clear pivot low to pivot high. And we will be talking about how to use the retracements within the next few videos. But for now, just know that we have this clear cut pivot low, pivot high. As price pulled down to that 50% retracement, we have this very small lower wick compared to the overall body, right? Now, I want you guys to take 20-30 seconds to look at this candle right here. Is this candle bearish to you? Yes or no? If we were to not see anything to the right of this, is this candle bearish to you? I want you guys to drop a comment down below if it's bullish or bearish, and I'll tell you why I see it as bullish. So yes, this is a red candle. Now, if we turn on the volume, yes, we also have red volume. But what do we notice with price at this key level and the volume right here? Again, the wick is very small compared to the overall body. But this huge elevation in volume, what it's actually telling us is that a lot of buyers were present right at this 50% retracement. So actually a majority of this volume more than likely came in on the buy side, and it was at this lower wick right here. There's been so many scenarios where I will go long on a candle, something like, I don't know, something like this, and so many scenarios where I'll go short on a candle, let's just say like this right here. It all depends on where are we trading in the market, what key level are we approaching, and what is the volume telling me when we hit that key level. So the whole reason why I ended up taking a swing on SPY yesterday was because I noticed Friday that we closed at this 50% retracement and we had this massive influx of volume right off a key level. So again, a majority of this volume came in on the buy side towards this lower wick right here. So as we open on Monday, I ended up getting long and my stop loss was right below the low of this candle right here. And I was able to capture a beautiful move up. So let's see what happened with the price action yesterday. You can see immediately price ended up jumping to the upside. And now if we're looking at today, we can now see that price is all the way back up here towards 591. And the buy signal was given down at this 584 level. When price closed, it was at 585.70. So again, I will go long on candles like this all the time or short candles like this all the time. It just really depends, where are we trading, what is the volume, and what is the price action. So let's just go ahead, let's draw a few more examples because I want to show you guys what you can start to look for when price is trading at key levels. So let's just start by looking at bearish candlesticks. Let's say that price comes down to a key level, we get a candle something like this, and we have a very long lower wick. Again, if we have a huge influx of volume, obviously that is a very bullish sign because we can conclude that a majority of this volume is coming in on the buy side, and then we can piece together this volume with this long lower wick to truly understand what is happening within the volume. Now, if this volume were to be very, very small, like we discussed earlier, those buyers are probably relatively weak, and that is not a trade I would take. I would always want to see an elevation in volume. But we can also get candles that look something like this, where it's a larger body, but then a very small lower wick, something like this. Again, I will long candles like this all the time, depending on where is price trading and what is the volume. So if I saw something like this, we came down to a key level, say it was a demand zone, a support zone, fib zone, whatever you want to say, and there was just small volume, again, I don't care. That's not a trade I'm going to take. However, if that volume was very elevated, something like this, then I'll conclude that price came down to my key level and a lot of buyers were condensed in this very small area and started to try to push price up. Well, if this is the case, I will take the long trade and my stop loss is right below here. In this scenario, your stop loss is going to have to be wider. So it really depends. Again, I'm going to keep repeating it. Volume, price action, key level. And I will long candles like this all the time. I will long candles like this all the time. Candles to me are all equal. The only thing I care about is that wick and the elevation of volume at my level. And then my stop loss is always on the opposite side of that wick. Just like this scenario right here, my stop loss was right on the opposite side of this wick. And just one more scenario of a bearish example. Say we get a very bullish hammer, something like this. Very long lower wick, letting us know that buyers are present. And again, that huge elevation of volume. These are all telling me the same exact thing. The only difference is the size of the wick. Like if we were to see something like this and very heavy volume, then obviously that is more bullish. But again, I will long candles like this, or this all the time, depending on where we are trading. So now let's look at some bearish examples piecing things together. Say we have a green candle, something like this, and we get a very long upper wick like that. Well, if we get a very long upper wick like that, that's telling us that price is pretty bearish. But again, I'm looking at where are we trading. If we're trading in the middle of nowhere, I don't care about any of this. But if we're trading at a key level, I absolutely care about it. So price comes up, rejects off of a supply zone. If we were to get a very small spike in volume, I don't care about it. But if we hit that zone and we get a huge elevation of volume, again, what this is telling us, even though this is a green candle and green volume, a majority of this volume is coming in from the sell side on this upper wick right here. So I will short candles like this all the time. I will also short candles that look like this all the time. So we get a very big body and then a very, very small upper wick, something like this. If we came up to a supply zone and I noticed that we hit it something like this, and again, we got a huge elevation in volume, we could assume that a majority of those sell orders are getting hit up within that supply zone. So if I see something like this and we're at a key level and we get a huge elevation of volume, that is telling me that sell orders are getting hit, and I will absolutely short a candle like this. And then just one more example. Let's just say that this was a gravestone doji, very, very small body, and then a very long upper wick. Again, this is very bearish, but what I'm looking for is that elevation in volume to tell me that orders are getting hit. So again, to wrap up everything in this video, you have to piece together the actual volume with what's happening within that candlestick, because it's not as simple as, oh, this is red volume or red candle, it's all selling, or oh, this is a green candle with green volume, it's all buying. Look at your wicks, look at where you're trading, and then piece together the volume, and then you will start to fully understand what is actually happening within the volume. Are buyers in control or are sellers in control? That is going to wrap up bootcamp day number 3 on volume and price action. As always, if you guys did find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. If you haven't already, do your daily check-in. Again, the more engagement these bootcamp videos get, the more bootcamp videos you guys will get. Everybody have an amazing rest of your day, and I will see you guys in the next bootcamp video.